Hello Wealth Nation! Thank you very much for coming back, watching another video. These are very uncertain times we're in right now. End of March, early April, things are looking very dire, a lot of uncertainty out there in the marketplace right now, but I want you to remember, uncertainty breeds opportunity. And that's what we're here to talk about today. You know, the past few weeks, I've held out on making a video about what to do, how to get into the market, because I really wanted to see how this was going to play out. And I've got a lot of inquiries, a lot of phone calls, a lot of emails, a lot of text messages. What am I going to do? When do I get into the market? How much should I invest? What should I buy? Is this the bottom? Did I miss the bottom? Was last week's rally already priced in? Is it too late? I've got three simple rules, three strategies that I use myself that I've been telling everybody to follow. These three strategies will make sure that you sleep soundly at night, that you maximize your potential for profit, and that you minimize your potential for loss. I cannot recommend a particular security, a stock, an investment. I've seen so many people out there right now doing that. Oh, you gotta buy this, you gotta buy that. I don't know what's right for your situation. I don't know where your investment experience is at. I don't know how much money you have. I don't know what your timeline looks like. I don't know what your risk tolerance looks like. I don't know what the tax implications look like. So instead of trying to figure out what's best for you, I'm going to give you the three rules so that you can figure out what's best for you. So rule number one, only invest in companies that you're capable of understanding. You know, right now there's a lot of pharmaceutical companies that are getting a lot of publicity. Potential vaccines, this guy's going to help that, research is going crazy here, and a lot of the equity prices have risen. Well, if you're an expert in pharmacy, if you're an expert in research and development, if you're an expert in patent law, if you're an expert in generic versus brand name, maybe you should be looking into pharmaceutical companies. What I know about pharmaceutical companies is that I don't know that much, so I don't invest in pharmaceutical companies. What I know a lot about are things like airplanes, coffee, cell phones, streaming services. These are things that I can grasp. These are concepts that I can understand. And it gives me comfort when I go and I narrow in on an investment that I want, something that I'm interested in, a company. I can read their 10Ks. I can listen to the earnings calls. I can read, a CEO letter to shareholders, and I can understand what they're talking about, what their product is, and the potential roadblocks, problems, tailwinds, headwinds, etc. So I would strongly recommend that you start with that. Get a piece of paper out, go on your computer, and start writing down a list. Write down things like, what am I passionate about? What do I know a lot about? Where do I spend my money? Here's a better question, where do I spend my money regardless of what the economy is doing? That might give you a little bit of an insight into what other people do, into what kind of companies might actually thrive in this environment, what companies may actually get bigger and more profitable after this is over, because let's not forget that this is a temporary event. And I understand that there's a lot of uncertainty, I understand there's a lot of fear, and there's a lot of pain. There's real lives being lost, and that's not something to take lightly. And because we don't know when this is going to be over, I can't confidently say if the bottom is in yet. But when you own a company that you understand, when it sells or makes a product that you love, something that you use every day in your life, or you buy again and again, it's a brand that you go back to. You don't care if you spend more. You don't care if it doesn't go on sale. It's quality, it's an experience. You walk in the store, you buy online, whatever it is, you sip the coffee, you hold the iPad, whatever the product is, and you're just like, yeah, I don't care about the rest of it. I don't care if there's something cheaper, I don't care if there's something better. The marketing, the product, the consumer aspect of it, the functionality, the taste, the flavor, the sensations it creates, I love it. That's a really good indication that might be an industry or a company that you want to spend more time researching. When you can understand it, you're going to sleep well at night because you're not going to think that you made a mistake. Further to that, if you want to get even deeper, try to find a company that has a long-standing management. Something that maybe the founder is still involved, or it's a very ethically run, high integrity based management team. Some examples if you want to go out there and just research yourself so you've got a bit of a benchmark. The gold standard out there is really Warren Buffett. Berkshire Hathaway, I mean, the guy is second to none. So if you read through some of his shareholder letters, you listen to some earnings calls, you kind of get a better sense. YouTube him, watch some videos. That's like the gold standard of management. How they run things, how they show the information, the transparency that they offer. But there's a lot of other good companies out there. Apple, Canada Goose, man, there's a million of them. So go out there, spend some time, research it. But that's number one. A company or a product or an industry that you can understand. Number two, when you're doing this and you've got a certain amount of money, we'll say $20,000. It's not important to know if this is the bottom or not. It's not important to know if you missed the bottom last week. What's important to know is that there could be higher prices coming, there could be lower prices coming, or you don't know where the prices are going to go. So what you want to do is break your money into chunks. Now these chunks are called tranches. Typically we'll use between 3 to 5 tranches when we're entering a position. So if you have $20,000 that you're looking at investing, we'll say for ease of math that you have 5,000 chunks. So maybe you deploy $5,000 into the market because you're not sure if this is the bottom. And next week you deploy another $5,000 into the market. And then the week after again, and maybe the last 5,000 you hold back and you really want to wait and see to make sure that the virus is over and that, the crisis is kind of done and things are really starting to ramp back up. Or maybe you think the bottom is in, so you put 2 tranches in. But whichever it is, I would strongly recommend that you break your money into chunks. When you do that, you don't have to be right about the bottom. It doesn't matter. A very similar fashion that this investment strategy is called dollar cost averaging. It was very famous with a lot of dividend investors, and it's still very active. But tranching is just basically, look, I've got this much money, I want to invest. I don't know when the bottom is. I don't really care. I've got 5 years, I've got 10 years, I've got 20 years. So what does it really matter? Who cares if you pay 10% more than you could have? In the grand scheme of things, 10 years from now, 20 years from now, you're not going to care. So stop trying to pretend that you're going to figure out the market. Stop reading Bloomberg and CNBC and listening to analysts because the truth is they don't have a clue. They don't know. And the people who are really out there, the hedge fund managers, the big money, the guys who might have a bit of a better idea, they're not going to tell you. They're going to be getting into the market when it's best for their clients. And if they go ahead and tell the market that they're getting in, a lot of times it's going to take away some of that opportunity. So a lot of these guys, if they're telling that they've gotten into the market, it's because they've already secured their position, they're already in, and they don't really care. They got a lower price, and they're happy to let everybody know what they did. So that's number one. Number two. Number three, have some patience. We don't know if this is the end. We don't know if this is the bottom. We don't know if we're going to go lower. We don't know when the virus is going to be over. But what I do know is the more news you watch, the worse you feel about what's going on. So stop watching news. Stop paying attention to the minutia. Stop caring about all the little vicissitudes that happen intraday and each day. Stop watching market recaps every day. Turn it off. Tune it out. It's just noise that's going to distract you. It's going to discourage you. It's going to make you think, did I make a mistake? Did I not do the right thing? Should I have done more? Stop. Forget about it. Write down what your goal is. When do you need that money? What's your time horizon? If it's longer than 2, 3, 4 years, 5 years, 10 years, just forget about it. You bought a company and you're happy to own it and you don't really care what happens in the next 6 months, year. Because the reality is maybe this is a V-bottom. Maybe we spring right back up. Maybe not. Maybe we drag bottom for the next 6 months. Maybe not. Maybe this actually causes a global recession. And this is, a mini depression that lasts 2 to 3 years. Who knows? Nobody has a clue. What I firmly believe is that once this is over, once the fear, not even the virus, but the fear of the virus is starting to subside, I believe then you'll start to see consumerism get back to regular routine. That doesn't mean it's going to rebound back immediately, and it might be different for different geographical locations. It might be different for different ticket items. I feel like people are going to be more apt and more confident to go maybe spend $30 on a movie or virtual golf or something like that versus go buy an $80,000 RV. That's just my hallucination, that's my perception. But I do believe people are going to get back. I believe that people are going to be pent up. They're going to be wanting to release all this energy from self-isolation for 2, 4, 6, or 8 weeks, and they're going to want to get outside. So what kind of opportunities does that bring? Which marketplaces are going to benefit from that? Which industries are going to see an uptick? Which ones are not? Which ones are going to be harmed because of that? So I hope that helps you. I can't give you exactly which stocks you should go buy because I don't have a clue what you want to do with your money and what your long-term goals are. But if you use those 3 rules, if you set those as kind of like an umbrella over top of your investment portfolio, I guarantee you're going to sleep great. You're going to be extremely happy with your decisions. You're not going to stress out. You can turn off all the news, all the media, and you can just focus on what's really important to you. Because it's probably not watching the recap of the day and seeing all the dread and negativity and doubt. It's probably hanging out with your friends, your family, doing something you love, focusing on your passions. I can't wait to hear all your successes. We'll talk to you soon.